Hey everyone, very exciting time. Ethereum is going parabolic, meaning the rate of price increase is actually increasing. And it's actually dragging Bitcoin up with it. So Bitcoin was in danger of breaking down before Ethereum started its move a couple days ago, right around the 1300 level. And there's been no looking back. It's gone up almost $400 in just 2 days. Now, this could be the start of something bigger because it becomes a virtuous cycle. Some people say it's a bubble, but I mean, are these trillion-dollar tech companies bubbles? When price increases, it attracts new investors into the mix. For example, I mean, Elon Musk just came out in support of Bitcoin about a week ago. I don't think he owns any yet, but he doesn't need to buy much in order to drastically influence the price. Remember, he could, if he bought $1 billion, it'll increase the price of Bitcoin by more than $1 billion, the market cap of Bitcoin by more than $1 billion. That's how it works when there's a thin liquidity. So is this the start of something bigger? Is this the end of the banks? It could very well be. You know, we can't tell yet, but you have to remember, I mean, nobody has much love for the banks. The banks are a symbol of what's wrong with our society today. Okay, and not just the banks. You think about Fortune 500 companies, they only have one goal. They only have one purpose. And their purpose is to make as much money as possible for themselves and for their shareholders, for the executives and for the shareholders. You know, Wells Fargo is a great example of what's wrong. You think about Wells Fargo and their new account scandal, right? Now, who did that help? Who was that good for? Well, it was good for the bankers, obviously. They got more bonuses, and it was good for the executives because they got more bonuses and their stock option value increased and their shares increased also. But it was bad for everybody else. Even the investors got screwed because these new accounts weren't even profitable for Wells Fargo. If you have new fake accounts where there's no fees being charged, they're not actually making any more money. They're just misleading. They're tricking the investors into thinking they're going to make more money in the future because of the new accounts, but the investors didn't know these accounts are fake. So this is something that's kind of like never happened before. Not only are they ripping off their customers, they're ripping off their shareholders too. So banks for a long time have had to resort to all these kind of used car salesman gimmicks in order to really boost their earnings because people aren't stupid enough to keep their life savings in the bank anymore like they used to. They're going to invest their money, right? They're not going to let the banks basically take their money and pay them 1% and then let it to someone else at 4%. People are too smart for that now, right? They can bypass the middlemen to some extent. So now banks resort to all kinds of gimmicks to make their money, right? They resort to overdraft fees. So like a lot of people, I try to keep my checking account balance low because I have better places to put the money. I put it in the stock market or in crypto, right? So when there's a mortgage payment coming up, I try to have just enough money to make the payment. Now, sometimes I don't have enough and I end up with bounced checks. So I had one time when I had a bounced check, a whole bunch of little bounced checks, like an AT&T bill, you know, a couple bills that were under $100, right? Several bills under $100. And for each one of those, they charged me 30-something dollars overdraft fee, right? Wells Fargo. So I called them and guess what? They waived the fees. Now that made me think, why would they waive the fees? They know that it's an unethical practice. So if you complain about it, they waive the fees. But a lot of people don't complain. They just pay the fees, right? They're too lazy to call or whatever. Another thing they do, they have a lot of tactics. Another thing they do is they're slow to give you your own money. Here's an example of this, okay? So I buy a lot of used cars. I rent them on Turo. One time I found a deal for a used car on Craigslist, right? So I didn't have enough in my account. I had to get it from my home equity line of credit. So I asked my dad to forward me the money so that I could get it right away and I'd repay him right away. So he also has a Wells Fargo account. So you think the transfer would be automatic. Well, it wasn't. Okay, he had to argue with the manager just to get them to deposit the money the next day, right? This is from a Wells Fargo account. So what are they afraid of? They say that the reason they need to hold the funds is for security reasons, right? So what's the security? So now we know they're lying because it's not for security concerns. What are they afraid about? They're afraid of Wells Fargo ripping itself off because the money is coming from a Wells Fargo account into a Wells Fargo account. They know the money is there, right? So basically the real reason that they do that is to make money off the float, right? So they make money off the interest for the time that you don't have access to your funds. In that extra day, maybe they make another 50 cents. And to them, that adds up, right? So there was one time when I was trying to close a real estate purchase where I had the money set to go. They put a hold on the funds for 2 weeks. And I had to argue with them to get it down to 1 week. And if they hadn't have reduced it to 1 week, I would have had to delay the escrow, which means I might have lost the whole deal right there just so that they could make their few $100s in float in that case, right? So it's very unethical, but they do it all the time. And Wells Fargo is one of the worst. They put longer holds than just about anyone. Speaking of that, Robinhood, I did have a Robinhood account. I don't use it anymore, but I did have a Robinhood account just to get some quick crypto because I thought that I'd be able to buy crypto quicker on Robinhood than other exchanges, but they're actually one of the slowest, and they're doing the same thing. Okay, so beware of these banks and financial service companies like Robinhood that are free, because Robinhood, they claim to be, take from the rich, give to the poor, no fee trading. Well, where do they make their money then? Well, Robinhood, when I deposited my money, they actually did not allow me to trade for 2 days after the money was already out of my account. Now, most exchanges will give you the money before it's actually out of your account, like Binance, right? Because they're making money off of the trade. So you know where their money is coming from, and they want you to trade, and they make their money honestly like that, because at least you know how much you're getting charged. Now, Robinhood makes their money dishonestly, right? So you have to think, if there's no fee for the trades, where do they make their money? Well, first of all, they're making their money off of the interest from all the funds that are in their account, obviously just like banks. But also, they are selling their entire order book to hedge funds like Citadel, who front run your trades. So for people that aren't familiar with front running, it's against the law, but it's done all the time, right? So it's just a matter of degree. So if they do it to a small degree and make only a few $100 million, they don't get caught. If they get greedy and try to make billions, they'll probably get caught. So basically what happens is they take all the orders, they give them to a hedge fund, and then the hedge fund goes, and let's say you have a bunch of people, you have 10,000 people that all want to buy Bitcoin. So now Citadel, well, maybe Bitcoin's not a good example. I'm not sure if Citadel is allowed to buy Bitcoin, but let's say you have 10,000 people that all want to buy Apple. So now Robinhood goes and they buy Apple for themselves, which raises the price of Apple. Now they sell this Apple to these 10,000 people. So they end up paying more for their Apple stock, and Citadel pockets the difference, right? So Citadel was one of the early investors in Robinhood, and people say that it was Citadel. There's a rumor that Citadel is the one that ordered Robinhood to shut down trading in GameStop because it affected their hedge fund friends. Now, this remains to be proven. I'm not sure either way about this one, but it's just an indication of what's wrong with the financial system, and it's not just financial companies. Remember, Google's slogan used to be "do no evil." I think they dropped that slogan because it seems like all they do is evil now. Have you noticed that when you watch a YouTube video these days, there are more and more ads, and they're longer and longer? You can't always skip them now. Why is that? It's obvious why, right? Because something that started out free, Google is cashing in now. So they're trying to make as much money as possible. Eventually, they're going to, I think maybe they already have it, but if they don't, eventually they're going to offer a subscription model with no ads and make more money that way. And then when they get greedier, they're going to offer a subscription model and add ads to that too, right? So it never ends. And conversely, think about how much the actual YouTube creators are making, right? I'm making nothing, right? Because I don't have 1,000 subscribers. But even people with tens of thousands of subscribers, they barely make anything. They're probably making something like 20% of the revenues that Google makes, right? They're just making pennies on the dollar, just the minimum amount that Google needs to pay them to keep them happy, to keep them from going to some competitor, right? They basically have a monopoly on user-generated content. So the blockchain is a solution for that too, because there are, I forgot what the name is, but there is a crypto out there, it's just getting started, where you can upload your own videos and you will get all 100% of the ad revenues minus the fees, right? That's as it should be. So that's the only way to break up this unholy alliance between tech companies and government, for example. I mean, between government and tech companies, we are getting squeezed. The Democrats are always rallying against, like big banks, and they're right in doing so. And then the Republicans are always rallying against big government, and they're also right in doing so. But between the two, there's no room left for anyone else. Between the growth in big government and the growth in big corporations, I mean, the little guy is getting killed. And that's where blockchain comes in, because it's about more than money, folks. It's not just a speculative investment. I mean, Wall Street Bets proved this. When they pumped GameStop, I couldn't understand why the originator of this idea, he was up at one point something like $50 million. I think he only put like 50 or 100 grand into GameStop, but because of the power of options, the leverage that he got from options, he was at one point up about $50 million and he never sold. So I couldn't understand, why wouldn't he sell? He must have known it would go down at some point, right? Because it's like a pump and dump scheme without the dumping. That's what makes it legal, because they're not doing it for profit. They're doing it to prove a point, right? So they're doing it to show that the little guy can beat the big guy. And I don't know if it's ever been done to this extent, right? But blockchain is the little guy's biggest weapon, because it's not just a pump and dump scheme, right? It's got actual concepts behind it that make sense, that are actually taking over. And if the little guy gets it started, right, like we have been, the big guy eventually will have to join the party, right? So I read an article that said if corporations use 1% of the cash on their balance sheet to buy Bitcoin, Bitcoin will go to 500,000, right? So obviously there's a lot of upside potential. And you know, the higher Bitcoin goes, the more likely they are to use their cash in Bitcoin, because they're going to be underperforming a lot of their peers. So for example, if you have some hedge funds that start buying Bitcoin, the people that invest in those hedge funds are going to be outperforming other hedge funds, right? So all the other hedge funds are going to say, hey, we got to get in on this game, right? We're missing out. I mean, Bitcoin's been the best performing asset class almost every year over the last 10 years. So eventually these old rich guys are going to take notice, and they're going to have no choice but to join the party. So luckily, us regular people are already partying right now, and by the time they get in, the price is going to be a lot higher. So I think this is something you just hold for the next 5 years, and hopefully by then you have a lot of, it's just becomes like a common currency, right? It becomes like the US dollar. Now, one thing I noticed is that Mnuchin in the last administration, he tried to pass a law restricting crypto by making it so that you would have to give your personal information for any transaction over $10,000, right? This would hurt the usefulness of crypto greatly, because there's nobody wants their transactions tracked just like stock transactions, right? It's a trade-off. So on one hand, increased regulation may give you the added sense of security in that if your crypto is stolen, maybe the government will reimburse you. Whereas, you know, do you really want them knowing all of your crypto transactions? Basically, Steve Mnuchin, his idea was that the US dollar is the leading currency of the world. So why should we allow a competitor to the US dollar? Well, the answer is you have no choice, right? You can't stop it. China has taken some limited measures to prevent the exchange of crypto, and it hasn't really worked. Crypto is still big in China. They have 60% of the world's mining capacity, so it's still big in China. And now with the Biden administration, there's a concern about taxation, basically. So they want to get their share of the crypto riches, and so that's why they also want to track your crypto transactions. But the thing is, if Bitcoin and Ethereum get big enough, quick enough, they're not going to be able to stop it, and that's what I'm betting on, because they are slow to act, right? They're always behind the curve. So once it becomes popular and it gets enough backers like Elon Musk and other billionaires and other corporate interests, they start backing it. Visa has plans to back it. PayPal backed it. Square is backing crypto. I mean, it's going to be unstoppable. So this is bigger than just money. This is a whole movement. And this is a movement that unlike GameStop, it can succeed. GameStop was just like, it was like just one battle in the war, right? And it was a battle that, like, they're bound to lose. It's a battle they can't win, but this is a battle we can win. Okay, so I encourage people, buy Ethereum, buy Bitcoin, hold on to it 5 years minimum, and don't even look at the price. I think it's just gonna keep going up, but don't even look at it. Don't be tempted to sell. That's the key, because most people, they sell too early. There are people that have bought Bitcoin at $1 and they've long since sold it all since then, and they all regret it. So if you like my video, go ahead and like and comment below and subscribe, and yeah, let me know if you like it. I'll make more videos like this one. Thanks.